Today is one of the biggest day for Palantir. Earnings report has just been dropped, and the numbers are quite shocking. Analysts are dropping their warnings. People became skeptical, and some were scared. However, it seems like these are only noise and lies around, because Wall Street just went straight right in and dropped massive moves. Moves that can push Palantir to a trillion-dollar company, and they're not stopping soon. What is happening? And why Palantir will have a breakthrough soon? Well, let me explain. Disclaimer. Today is huge for Palantir. We just got the Q1 earnings report for 2025, and wow, it's got the entire community buzzing. Reactions? Mixed. Some are optimistic, some are straight up panicking. Why? Well, right after the report dropped, Palantir's stock price took a dive. That spooked a lot of investors. Analysts are saying things like, this might be the end, or the numbers just aren't lining up. You can feel the fear across the Palantir community. It's like everyone suddenly hit the panic button. But here's the twist. What if I told you that what's happening right now is actually the opposite? Like seriously bullish. And it feels like everything you're hearing now is just lies without any proof. According to Wall Street, this dip isn't the beginning of the end, but the calm before an explosive rally. Sounds wild, right? And it's not just a random statement. They're moving numbers according to it. And when that time comes, you'll want to have some Palantir stock ready to go. Good news. Today might just be your lucky day, because you can actually grab one Palantir stock absolutely for free right now. Just hit the link in the description below. No catch, no nonsense. Just a solid opportunity. But hold up. Before we get too deep into the future, let's look at what's freaking people out right now. Check out the price chart. So one analyst broke it down using what's called gap analysis. Basically, back in late April, Palantir broke through a key resistance level, around the mid-90s, and then jumped without looking back. It left a price gap behind, meaning it never came down to retest that zone. Now, after the earnings drop, if Palantir opens somewhere around the low 110s and slides down, there's a wide open area between there and that original breakout zone. And because there's not much price action or consolidation in that space, it could drop fast, like real fast, all the way back to that breakout area. But here's the key. That's not a bad thing. In fact, filling that gap could be one of the healthiest moves the stock could make. Why? Because buyers are just waiting in that lower zone, around where the gap started. That's where strong support comes in, and it's where Palantir could reload for the next move up. The real danger zone would be if it breaks below the low 90s. That's the line the bulls absolutely need to defend to keep the long-term uptrend alive. But honestly, the setup right now is textbook bullish. Big tech is adjusting after the news, volatility is up, and Palantir is just doing what strong stocks do, retesting before liftoff. This might just be the perfect setup for something huge. But here's the real question. Why did Palantir drop after what looked like a solid earnings report? Well, it comes down to expectations. Wall Street had sky-high hopes, and when that happens, even great results can fall flat. Palantir actually delivered strong numbers and even raised its forecast for the year. But for some investors, it just wasn't good enough. The stock had already been on a massive run, up over 60% this year alone, and that's on top of a huge rally last year. So going into this report, the bar was set incredibly high. As one analyst put it, we've now reached the point where solid earnings beats and raised guidance just aren't enough to push the stock higher, not when so many investors are already priced in perfection. It's like showing up with an A+ and being told it should have been an A++. Palantir is expected to lose nearly $20 billion in market value if these losses stick. But here's the thing. The business itself? Still booming. The company continues to ride that wave of AI demand and deep government partnerships. In fact, revenue from U.S. government contracts jumped nearly 50% year over year, and total revenue climbed close to 40%, beating analyst expectations. That kind of growth, especially in a seasonally quiet quarter, shows how strong demand really is. Analysts are saying the U.S. market is driving the bulk of these wins, locking in a ton of new million-dollar deals, the most they've ever done in a single quarter. Palantir even raised its full-year outlook, expecting to hit just under $4 billion in revenue, up from what they previously projected. And despite the drop, at least 7 major firms actually raised their price targets for the stock after the report. The new average target sits around the mid-90s. So why the dip? Well, a few analysts turned a bit bearish, not because the company is failing, but because the stock is now trading at pretty rich levels. One analyst pointed out that Palantir's price-to-sales ratio is sky-high. way above many of its peers. That kind of valuation puts extra pressure on every earnings report to blow expectations out of the water. On top of that, there's the ongoing concern about stock-based compensation. About 1/5 of Palantir's revenue is being paid out in stock. And while many tech companies do this, it still bugs some investors who see it as a drag on shareholder value. But here's the exciting part. All that noise, the fear, the panic, the dramatic sell-off, it might not matter at all. Because Wall Street just dropped a bunch of bombshells. And they're actually pointing to something much bigger. Palantir is in a breakthrough position. Right after earnings, several big-name analysts raised their price targets. And not just by a little. We're talking jumps from the 80s to the 90s, even over 100. Why? Because underneath the temporary market jitters, Palantir's numbers were strong. We're seeing record-breaking U.S. commercial deals, insane growth in government contracts, and acceleration in almost every part of the business. One analyst said the company is firing on nearly all cylinders. Another called out that demand is unrelenting, even in a typically slow quarter. And despite all the talk about valuation, these firms still raised their targets. Why? Because Palantir isn't just growing. It's becoming a core piece of how the U.S. is adopting AI across healthcare, defense, energy, manufacturing, you name it. And if that wasn't enough, Dan Ives, went on BBC to say again what he's been saying for years. Palantir is a gem, and he's been a long-time believer that this company is heading toward a $1 trillion valuation. When someone with that much influence keeps doubling down, you pay attention. So yeah, some analysts are cautious about the stock's rich valuation. That's fair. But in the end, Wall Street sets the tone. They control the capital, they shape the sentiment, and they're the ones calling this a bullish setup, even in the face of short-term weakness. If Wall Street's backing Palantir, you better believe the story isn't over. It might just be getting started. And here's the thing. If you're still staring at Palantir's price chart thinking, why the drop? One analyst broke it down perfectly. He said, yeah, Palantir's getting crushed after hours, but honestly, it kind of makes sense. The stock had surged more than 80% in just the last month. That kind of run-up usually comes with a cool down. It's not about the business being weak, it's just how the market works. After a massive rally, people take profits. That's all it is. But here's the real kicker. Despite that dip, Palantir's fundamentals are rock solid. We're talking about a company with an incredible balance sheet, no debt weighing it down, and cash just sitting there ready to fuel more growth. And that growth? Still very much alive. Government deals are expanding, commercial demand is booming, and they're landing some of the biggest contracts in the company's history. So if you zoom out, the current state of Palantir is actually stronger than ever. The stock might be cooling off, but the business is heating up. And when price and fundamentals eventually realign, that's when the real breakout happens. So don't let the red candles fool you. This story is far from over. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.